Hey guys, so in this video, I want to focus on IPOs. As you all know, we have one coming up. I'm going to make a video detailing more of that company. I already posted a preliminary video on that, but this video won't focus primarily on that IPO, but this is me giving you specific principles and specific items that you would need to know as you start investing in these IPOs. And a couple of things also that I like to mention. Yesterday, as you all know, we ended the video series talking about what's happening in the US markets. We talked about why the US market is up in spite of them losing a lot of jobs. That unemployment in the US is ridiculously high, but because the US government is pumping a lot of money into their system, that's why there's so much money going around. And one of the places where it's going is the stock market. So we're having our first IPO for the year, and I want to give you at least as much insights as possible for you to be able to trade. Comment below if you guys have, I don't know, bought an IPO in the past. Did it go the way you wanted it to go, or did it not go the way you wanted it to go as well? And that's what we're going to talk about. My name's Marvin Gurmo, by the way. I'm a stock market trader and investor. I've been in the market for more than a decade now, and the whole goal of this channel basically is just to show you, to teach you more and more about the stock market, to give you insights so that you can win, you can trade the markets with confidence, because I really believe that having the right information will help you to make the right decisions as well. It won't be perfect. The investing in the stock market is all about following your strategy, following your plan based on information that you have at that point when you make the decision. So, it doesn't mean you won't make mistakes, but in line of those with your mistakes, you still follow your strategy, and that's what this channel is all about. And I would appreciate it if you could subscribe and hit the bell so you get updated every time I come up with new videos every single day. And I have a second channel. It's called Marvin Gurmo Podcast. All of the videos that are different from this channel, because this channel will primarily focus already just on the stock market, but everything else from business, investing, entrepreneurship, success, personal finance will be there. It's Marvin Gurmo Podcast. If you can't find it, the link is in the description below. You can just click that, and appreciate it if you can give it also as much love and support and likes as well. So there. I want to start with this. No, we are in an era right now where there's a lot of fear. We are in an era right now where everyone's scared. When everyone's scared and there's a lot of fear, it might be harder for companies to raise money. As you all know, we are in an era where there's a pandemic. The whole world, majority of the whole world, is basically on lockdown. In some areas, funding is drying up. In some areas, cash is drying up. In some areas, businesses are not doing so well. So you have to look at also how the climate is in terms of investing. You have to look at what's happening in the global landscape, because it's these people who have extra funds. It's these large institutions really that's gonna pump in and bring in the money, that's gonna invest in it. So you have to consider, are there a lot of people who's optimistic based on what's going on, because they're the ones who are gonna buy the stock during the IPO and also after. Because if no one's gonna buy it, if there's not a lot of excitement, if there's not a lot of optimism, or there's no extra funds for people, then there's a shot no that, hey, who's gonna buy it? How many people will buy it? But then again, you also have to understand this: companies can always delay their IPOs. They can. Basically, it's pretty much possible. However, you have to understand this: the fact that the companies this year, whoever they may be, that will pursue and continue their IPOs, it means that most likely they have a lot of institutional investors already in it. And it again, it's if you have a larger market cap after you're raising a larger amount of money versus you're raising a smaller amount of money, it would be easier for companies who are raising smaller amounts of money to be able to secure that institutional investor to take care of a lot of the funding for that particular IPO, and whatever's extra will probably go to the brokers, retailers, etc. And that's how you can gauge it as well. The larger the IPO, the harder it will be for companies, or at least for that company to get as much investors as possible, but the smaller it is, it will be easier to fulfill it. And I want to show you this also. People have this misconception that when you buy an IPO, it will always go up on the first day, or if it doesn't go up on the first day, just give it a couple of days more, it's going to push up. IPOs are always going up. I want to show you a couple of IPOs in the past. So let's look at Cebu Pacific. Cebu Pacific went into an IPO somewhere around the 2010 period. So as you can see this, first day of the IPO opened here, then closed higher. But right after that, boom, sell down, sell down, sell down. 3 days straight of 3 days straight of selling just right after the IPO. So you can benchmark it that way, that when you try to consider how IPOs work, it doesn't. People always want it to go up, but you have to understand this. It doesn't always work that way. And if you look at how IPOs last year responded, you can look at KPPI. It was one of the better ones in terms of price action, in terms of price movement. Because if you look at KPPI, everyone knows what happened to it on the first few days, and that's what brought excitement to a lot of people in terms of the IPO scene. So if you look at this, there was a big jump quickly, just right from here. The IPO price was even lower than this, but after that, boom, went up all the way intraday to 27. Then it started to retrace already. Right after that, after the large retracement, if you remember what happened after the large retracement, you see this. It consolidated from August all the way to February this year. Then, because of what's happening on the coronavirus, you now see it start to break down and start to go down again. So, just for people who want to reference this also from a support and resistance perspective, there's a 9 peso resistance level for KPPI. And if you notice it also went back. If you look at what was happening here, this was the large drop that happened because of the lockdown, and the large drop massively brought it down. So for people who bought intraday, even if they held on to it for even less than a year, they most likely would have either a paper loss, or if they sold already, they might have gotten also larger losses. In the same way, you have AXLM, Axelum. When they did their IPO, as you notice, large intraday drop, then it started to go into a downtrend. If you look at All Home, IPO from last year, went massively sideways, did not go anywhere. So this debunks all of the all of the talk that when you see something like when you see people were comparing All Home to, oh, look at Golden Haven. Golden Haven massively went up after its IPO. It went all the way to 300 plus, and it was very, 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 very low when it started. But if you look at All Home, that's why you cannot, even if they have the same chairman, they have the same leadership. Essentially, they're a different company, and they won't move the same. I hope you guys are getting this. Comment below if you are. But look at this. From October 2019 all the way to the start of the year, it literally did not go anywhere. Then, boom, it started to break down already. So, for All Home, it's a different progression. Now, after the IPO, it did not go anywhere. After it did not go anywhere, then it suddenly started to drop. And lastly, one of the IPOs from last year, you have Frutas. Frutas intraday was so interesting because it jumped. And what was so interesting about that, I was on my way to Davao. I was on my flight. When I was on my flight to Davao, it was literally massively up, massively high intraday. Then suddenly, when I landed, it started to fall down already. It started to go lower. And as you can see here from this candlestick, it got sold down. Then the days leading to that after, it started to go down. It went even to 1 peso per share. And that's what it revisited also during the during the lockdown slash coronavirus movement downward. So that's what I want to mention to all of you. They do not move all the same. The second thing I'd like to talk about is basically this. You have to note that for Frutas, also, it was a relatively smaller IPO. People always say if it's a smaller IPO, there's a bigger chance for that it will massively go up. Simply, people would always reference how Golden Haven went. People would always reference how Double Dragon went. But it's not the same for every company. That's why if there are a couple of things that I want you to get from all of this. Number one, do not buy into an IPO if you do not know the company that you are getting into. Never, ever, ever, ever ever, say it with me, ever buy an IPO if you do not know the company. If you just know the name, the ticker, the price, and you don't know the fundamentals, you don't know if it's actually cheap, you don't know how much was their net income for the past 3 years, you don't know their level of debt, you don't know their ROE, you don't know how liquid they are, then better not buy it. Always buy something that you know. Always buy something that you have a firm conviction. And and here's the thing, everything is disclosed. Everything will be in their prospectus. Everything will be written down. So you just have to take the time to be able to read, to be able to analyze it, to check their growth plan, their growth trajectory. Because at the end of the day, if you're buying the IPO today, hindi ka na makikinabang sa kung ano man kinita niya before eh. Hindi ka na makikinabang for whatever they did in the companies that they started to open. So the reason why I'm saying this is you have to look at is the company in a sector that's growing. And because I'm saying this in the time of the coronavirus, is the company also connected to something that won't be either disrupted because of this new normal, or if they're disrupted, have they innovated? Were they able to tweak? Were they able to find ways in order for them to retain their customer base? Were they able to find ways in order for them to continue to generate sales in this new normal, in this lockdown, in this different 2020 that we are walking in? So that's what you need to know. You need to ask yourself, is the company affected? Will the company grow? Will the company continue to go up? What's going to happen to the company in general? How will they continue to earn? Where will the company be 3, 5, 7, 10 years from now? Then you also ask yourself the question: if it was your friend who owned the company and he offered it to you, what are the questions that you would ask him if you would put your hard-earned money there? Sometimes we say it's easy for us to jump the gun when we see an IPO, which brings me to my next point. People always think, and there's a misconception that because it's an IPO, it's cheap. People have this misconception if the price is low, it's cheap. Not really. You have to remember, and I've said this in so many videos, and for those who attended their Stock Smart sessions, you know what I'm trying to say. No entrepreneur will sell their company at break even. No entrepreneur would sell their company at a very cheap price. It's always based on you guys, investors, to see, is this something that's fair based on the timeline that I have? Is this something that's fair based on their growth trajectory? But always, it will always be at a premium. It will always be at a price that's relatively higher, because of course no one's forcing you to buy it. The owners, the founders are not forcing you to buy it. You always have free reign if you want to buy the stock or not. That's why you need to make the due diligence in order to see if it's something that's worth buying and does it have growth for the long term. And I'll say this over and over and over again. Study the valuations, study those ratios, study if it's actually cheap. Again, what I've mentioned earlier in the first part was you need to know what it is and how good it is, but above and beyond that, you need to know also how cheap it is, because how cheap it is also will determine what your upside will be later on. And do not get too emotional. The people always say that this is a once in a lifetime opportunity. This is a once in a lifetime opportunity to make money in the market. No, it's not. IPOs, regardless of what it is, and I've shown you some examples already. Since the market is all about cycles, since the market is all about supply and demand, since the market is all about buyers and sellers, there will come a point in time where it will still retrace. There will come a point in time that those who bought early will sell. There will come a point in time where those who bought at the start will want to take profits. So when people do that, more sellers bring the prices down. And as it starts to go down, there's an expectation that, hey, that's an opportunity for you to buy. So meaning, if you were not able to buy in the IPO, don't be pressured, because there will be an opportunity for you to buy again. There will be an opportunity for you to buy some more when a retracement will happen. It's not a once in a lifetime opportunity. Opportunities always knocks several times. It will give you a chance, and the stock market is a good example because everything moves in cycles. You will always see, regardless of what that IPO company is, you will see that there's a narrative that it could also drop, that it could also fall. And that's what I want to say to all of you. You need to know the company, and here's the thing. You need to set your parameters. Very, 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 very important when you start coming in and buying into IPOs. And I'm going to show you some companies also in the US that went into IPOs. This is actually Snapchat, which went into an IPO a couple of years ago. You need to set what your plans are, meaning, am I buying this just for the short term? Meaning, I'm buying this if it goes up at a certain price over the next few days. I'm buying it based on price action. Once it starts to go up, I have a parameter to tell me when to sell, either intraday or in the next few days as it starts to move. But if that's your way of buying, you need to also set aside, what if it does not go up? What if it goes to the other direction? How will you sell? How will you take? How will you? Are you willing to sell at a loss? Because at the end of the day, if you try to buy and sell that way, it's a toss up. It doesn't mean that it's a small IPO. It doesn't mean it's a good company that it will go up already on the first day. If that's your play, you must be prepared when to actually sell and cut your losses. So things like that. Or if you're a long term investor, you have to think about what's your plan. Uh, if you buy and it goes up, do you add some more? If you buy and during the IPO or prior to, or during the offering for the IPO, then it starts to go down. Do you add to your position? What do you do? What As you start owning the stock, what will cause you to sell later on? What are the things that you're looking for in the fundamentals that when all of those things will change, you start selling either at a loss or at a profit. So those are the parameters that you need to set. You need to define that before you make the trade. You need to set that because at the end of the day, when you see stocks move up or when you see stocks start to move down, your emotions will kick in. And if you do not define those parameters, it will be relatively harder for you to be able to make winning decisions. And if there's one thing that I know, you have to remove your emotions from your trading. You have to remove sentiment from it. You have to define your rules even before you make the trade. That being said, there are a lot of IPOs that have done well. Pure Gold has done pretty well. After its IPO, I think it started around 11, 12 pesos, around 2011. If you look at it here, right after that boom, it started and moved way up. And Pure Gold is a fundamentally sound company, especially right now. It's part of the basic essentials. It's part of what people will normally buy during this lockdown, during this era where people are scared and people won't spend and people need cash. Pure Gold is one of the companies that have done very, very well for itself. So that's how you can start analyzing it. No, you look at companies that are very, very interesting, that you know is part of the economy, and you start buying into them and you start investing into them, but it should be part of your plan. So there, comment below if you're learning, if this is something that's very, very helpful for you, if you're getting insights on this. Don't worry, I'm making another video to talk about the first IPO for the year. We're gonna discuss it. We're gonna talk about the nitty gritty about the company, so you get to also analyze it as well. But those are just some inputs. I'm gonna make more videos like this. If Comment if this is something that's helping you, so that I know the type of videos that I'll make. And also, if you have questions from this, please put them in the comment section so I know the topics that I'll do for you guys as well. And for those who want to learn more about the stock market, links are down below. I have 5 books. You can order them in Shopee. Shopee is now open again. They deliver to almost every part of the Philippines. So you can click the link there and it will be delivered in just a few days. If Shopee is not available in your area, there's another link beside that where you can click that and it will be delivered to you right after the lockdown. So if you want to learn technical analysis, fundamental analysis, or the basics of the stock market, you can just click the links below. Or 3 online courses next week, Zoom call, Sean Si. We're gonna talk about investing during this new normal. You can enroll to that. It's a one-time, I think, Zoom course. Then we have 2 more, Stock Market for Everyone with Chinkee Tan. Link is in the description. It's a Tagalog stock market basic course. Then we have another one called Make Money, Grow Money. It's entrepreneurship, business, investing, and the stock market with Sean Si. Uh, for those who want to learn the basic rudiments of investing, business, and the stock market, that course is for you. So there. I hope you guys got a lot from this. I hope this is something that's helping you. Um, I hope that if this is something that's adding value to you, please hit the like button, the thumbs up, so you YouTube pushes this video to more and more Filipinos that are interested about the stock market. And above and beyond that, if you like to hear more about this, please subscribe and smash the bell so you get updated every time I come up with new content about investing. And also, second channel, Marvin Germo Podcast. The link is in the description below. I really hope that you can share. You can also support that the same way as you've been supporting this channel. And there, announcement also, Stock Smarts Manila, they just announced that the ECQ for Metro Manila will be up until May 30. So there's there's a chance that by June 14, everything might be okay already and we will proceed. But I'll keep updating you. But if everything is good, we're gonna continue and do Stock Smarts Manila in the same way and the same time for other cities as well. So I guess that's it for now. This is Marvin Germo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, guys, and God bless you all.